Paytm, India's mobile wallet that became fintech giant. In 2010, when most Indians were still queuing at mobile recharge counters and carrying wads of cash in their wallets, a young entrepreneur from Aligarh named Vijay Shekhar Sharma had a vision that would fundamentally transform how an entire nation handles money. Starting with just 200,000 rupees in his bank account and operating from a cramped Delhi office, Sharma launched Paytm as a simple mobile recharge platform. What began as a basic service, allowing users to top up their phone credit online, would evolve into India's largest digital payments ecosystem, processing over 1.2 billion transactions monthly by 2020 and achieving a valuation of $16 billion. This is the remarkable story of how a middle class dreamer from small town India built a fintech empire that would digitize the financial lives of over 350 million users and challenge the very foundations of India's cash dominated economy. Vijay Shekhar Sharma's journey to fintech stardom began in the most unlikely of circumstances. Born in 1978 in Aligarh, Uttar Pradesh, to a school teacher, father earning just 1,500 rupees per month, Sharma experienced firsthand the financial struggles that plagued middle class Indian families. His entrepreneurial spirit emerged early when he started publishing Hindi magazines during his college years, but it was his fascination with the internet and mobile technology that would define his destiny. In 2001, at just 23 years old, Sharma founded his first company, XS Communications, but the real breakthrough came in 2009 when he recognized a massive gap in India's mobile ecosystem. Indians were spending hours in long queues to recharge their prepaid mobile phones, a process that was both time-consuming and inefficient. Sharma envisioned a digital solution that would allow users to recharge their phones instantly through the internet, and in August 2010, Paytm, short for Pay Through Mobile, was born with this singular focus. The early days of Paytm were marked by bootstrap operations and relentless hustle. Working with a team of just 5 employees from a small office in Noida, Sharma invested his entire savings of 800,000 rupees to get the company off the ground. The initial business model was straightforward. Paytm would partner with telecom operators to offer online mobile recharge services, earning small commissions on each transaction. However, building trust in a market where digital transactions were virtually non-existent proved to be an enormous challenge. Indians were skeptical about entering their mobile numbers and payment details on websites, fearing fraud and security breaches. To overcome this barrier, Sharma implemented cash-on-delivery options for mobile recharges, where Paytm agents would collect cash and process the recharge remotely. By the end of 2011, Paytm was processing over 1 million mobile recharge transactions monthly, generating revenues of approximately 20 crore rupees and establishing itself as India's largest mobile commerce platform. The company's growth trajectory attracted its first major investor, Sapphire Venture, which pumped in $8 million in Series A funding in 2011. Recognizing that mobile recharge alone wouldn't build a sustainable empire, Sharma began expanding Paytm services aggressively. In 2013, the company launched its marketplace, allowing users to purchase everything from electronics to fashion items through the platform. This diversification strategy proved prescient as e-commerce began exploding across India, driven by increasing smartphone penetration and improving internet connectivity. Paytm's marketplace quickly gained traction by offering competitive prices and convenient payment options, including the ability to pay through mobile wallet balances. The platform's gross merchandise value reached 1,000 crore rupees by 2014, with over 17 million registered users conducting transactions across 100,000 different products. However, the real game changer came when Paytm introduced its digital wallet service in 2014, allowing users to store money digitally and make payments with just a few taps on their smartphones. This innovation positioned Paytm ahead of competitors and laid the groundwork for its transformation from an e-commerce platform into a comprehensive financial services ecosystem. By 2015, the company was processing over 75 million wallet transactions monthly and had raised an additional $575 million from Chinese internet giant Alibaba, which became Paytm's largest stakeholder. The pivotal moment that catapulted Paytm from a growing fintech startup to a national phenomenon came on November 8, 2016, when Prime Minister Narendra Modi announced the demonetization of 500 and 1,000 rupee notes, effectively removing 86% of India's currency from circulation overnight. While the entire nation scrambled to adapt to the sudden cash shortage, Paytm found itself perfectly positioned to capitalize on the crisis. Sharma and his team worked around the clock to onboard millions of new users who were desperately seeking alternatives to cash payments. The company's servers crashed multiple times due to overwhelming traffic, but Sharma's quick thinking and aggressive marketing campaign, including the famous Paytm Caro advertisement blitz, helped capture the moment brilliantly. Within 48 hours of demonetization, Paytm's daily transaction volume increased by 700%, and new user registrations spiked to over 7 million in the first week alone. The company processed over 1 billion transactions in the 6 months following demonetization, compared to just 350 million in the entire previous year. By March 2017, Paytm's user base had exploded to over 200 million, making it one of the largest digital wallet platforms globally and establishing Sharma as the undisputed leader of India's digital payments revolution. Building on the momentum from demonetization, Sharma embarked on an ambitious expansion strategy to transform Paytm into India's comprehensive digital financial services platform. In 2017, the company launched Paytm Payments Bank, one of India's first payments banks, offering savings accounts, debit cards, and digital banking services to users across the country. This move was particularly significant as it allowed Paytm to offer interest on wallet balances and provide traditional banking services without the overhead costs of physical branches. The payments bank reached 58 million account holders by 2020, making it one of India's largest banks by customer count. Simultaneously, Paytm ventured into insurance, mutual funds, and lending services, creating a full-stack financial ecosystem. The company's lending arm, Paytm Money, facilitated over 10,000 crore rupees in loans by 2020, while its insurance platform became one of India's largest digital insurance distributors. Paytm also revolutionized offline payments by introducing QR code-based payment solutions for merchants, enabling small vendors and large retailers alike to accept digital payments seamlessly. By 2019, over 15 million merchants were using Paytm's payment solutions, processing transactions worth over 50,000 crore rupees annually and generating substantial commission revenues for the platform. The international recognition and validation of Paytm's business model came through multiple high-profile funding rounds that established the company as one of India's most valuable startups. In 2017, SoftBank's Vision Fund invested $1.4 billion in Paytm at a valuation of $7 billion, marking one of the largest venture capital investments in Indian startup history. This was followed by additional funding from Berkshire Hathaway, Warren Buffett's investment company, which put $300 million into Paytm in 2018, representing Buffett's first major investment in an Indian company and a significant endorsement of the fintech sector's potential. The continuous influx of capital allowed Paytm to invest heavily in technology infrastructure, customer acquisition, and geographic expansion. The company built one of India's most sophisticated payment processing systems, capable of handling over 500 million transactions per day, with 99.9% uptime reliability. Paytm's technology stack included advanced fraud detection algorithms, artificial intelligence-powered credit scoring systems, and blockchain-based verification processes that set new industry standards. By 2020, the platform supported 12 different languages and operated across over 2,000 cities and towns in India, making digital financial services accessible to users from metropolitan areas to remote villages.
Paytm's success wasn't just measured in financial metrics, but also in its profound impact on India's digital transformation and financial inclusion goals. The platform played a crucial role in bringing millions of previously unbanked Indians into the formal financial system for the first time. Paytm's simplified user interface and vernacular language support made digital payments accessible to users with limited technological literacy, while its agent network provided on-ground support in rural areas where internet connectivity and smartphone adoption were still evolving. The company's data revealed that over 60% of its users came from Tier 2 and Tier 3 cities, demonstrating the platform's success in penetrating India's heartland. Small merchants who had never had access to formal banking services could now accept digital payments, track their sales digitally, and access credit based on their transaction history. Paytm's merchant services generated over 15,000 crore rupees in additional revenue for small businesses by 2020, while its lending products provided over 50,000 crore rupees in credit to individuals and businesses who previously had limited access to formal financing. The platform's insurance and investment products democratized financial services that were once available only to affluent urban customers, with over 40 million Indians making their first mutual fund investments through Paytm Money. However, Paytm's journey to fintech dominance wasn't without significant challenges and competitive battles that tested Sharma's strategic acumen and resilience. The entry of global giants like Google Pay and PhonePe, backed by WhatsApp and Walmart respectively, intensified competition in the digital payments space dramatically. These competitors leveraged the Unified Payments Interface, a government-backed instant payment system that allowed direct bank-to-bank transfers without requiring users to load money into digital wallets first. This development threatened Paytm's wallet-centric business model and forced the company to rapidly adapt its strategy. Additionally, regulatory changes by the Reserve Bank of India imposed strict compliance requirements on payments companies, including mandatory KYC procedures and limits on wallet balances, which affected user experience and growth rates. Paytm also faced criticism regarding its path to profitability, with investors and analysts questioning the company's ability to generate sustainable profits given its heavy spending on customer acquisition and cashback incentives. The company's marketplace business faced intense competition from Amazon and Flipkart, forcing Paytm to pivot away from e-commerce and focus primarily on financial services. Despite these challenges, Sharma's leadership and the company's ability to innovate and adapt helped maintain Paytm's market leadership position, with the platform retaining over 40% market share in mobile wallet transactions and establishing itself as India's second largest UPI payments processor by 2020. As Paytm entered 2020, the company had successfully evolved from a simple mobile recharge service into India's most comprehensive fintech ecosystem, setting the stage for its next phase of growth and expansion. The platform's 350 million registered users conducted over 1.4 billion monthly transactions across payments, banking, insurance, investments, and lending services, generating annual revenues of over 4,000 crore rupees. Sharma's vision of creating India's largest digital financial services company was becoming reality, with Paytm processing over 12 billion transactions annually and maintaining its position as the country's most valuable fintech startup. The company's technology infrastructure supported over 21 million merchant partners, from street vendors to large enterprises, while its payments bank served customers across 99% of India's postal codes. Paytm's lending portfolio exceeded 25,000 crore rupees. Its insurance platform had distributed over 100 million policies, and Paytm Money had become India's largest mutual fund distributor by customer count. The decade from 2010 to 2020 had witnessed Paytm's transformation from a bootstrap startup with 5 employees to a fintech giant employing over 26,000 people and serving as the digital backbone of India's economy. Vijay Shekhar Sharma's journey from a small-town dreamer to one of India's most successful entrepreneurs demonstrated that with vision, persistence, and the ability to adapt to changing market dynamics, it was possible to build an empire that not only generated massive wealth, but also transformed the lives of hundreds of millions of people, making Paytm's story one of the most remarkable success stories in global fintech history.